I'm Dr. B, and yes, I'm a real ER doctor. So you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B at Verified Investing, and today we're going to be talking about moving averages. This is a critical point that you need to learn when it comes to technical analysis. This can act as support and resistance and also show you the trend of the stock. So let's go on and move to the charts. All right, so moving averages, they can act as essentially two different indicators, right? They can give areas for support and resistance, but they can also tell you the trend of the stock, okay? And so we're going to talk about these things. So first, I want to show you a real chart. This is the S&P 500, the SPY on the weekly chart. And you can see here the price action is staying above this yellow line. Well, this yellow line is the 200 moving average, and we're going to talk about what that means. The 50 moving average is the red line. But look at the price. This is back in 2016. Look at how the price came down here, right, from this fall and bounced right here on the yellow line, right? Price moved higher, it moved higher, and look at exactly where it bounced, right here on the 200 weekly moving average, right? This was COVID. Clearly, it pierced right through the 200 and then came back up. And look at where the 2022 bear market ended and pivoted, right here at the 200 weekly moving average. So this is really important to understand. Over the years, over the past 8 years, you could have had very defined buy levels on the S&P 500 that could have gained you significant alpha in the markets. So let's talk about the next chart, okay? So this is the NASDAQ, the QQQ weekly chart, and you can see the same type of pattern. Now, in this case, 2015, 2016, you had the kiss of that line right here, the yellow line. Right here, it didn't quite get there, also kissed this area, and this was the COVID lows. And we essentially kissed that 200 moving average at the bottom of COVID, and then look at where the 2022 bear market, started to pivot. It essentially came down here, kissed the 200, and then also just chopped alongside this, regained the 200, and then moved higher. The 200 moving average is the strongest moving averages of all of the moving averages. So I just wanted to show you this, and let's move on to the types of moving averages. So the SMA is the simple moving average. The EMA is the exponential moving average. I like to keep it simple. I like to use the SMA, or the simple moving average. Okay, so what does a moving average mean, right? So in general, it's the average price of the instrument or financial asset over the last 50 days or 50 candles on a 50 SMA, or we'll just call it the 50 MA, or the last 100 candles for the 100 MA, okay? Or the last 200 candles for the 200 MA. So in general, every chart, right, the 1 minute all the way up to the weekly chart, they all have their own individual price calculations based on that time frame. For example, the weekly chart, the 200 MA, is the average price over the last 200 weeks, okay? On a weekly chart, that would be 200 candles. On a 10-minute chart, that would be the last 200 candles, right? So each candle would be 10 minutes. It would be the last 200 candles on the 10-minute chart, and so on and so forth. And there's a variety of moving averages that people use: 20 MA, 50 MA, 100 MA, 200 MA. I tend to use the 50 and the 200. Those seem to be the most widely followed and therefore respected trend line, moving averages, which tend to act as support and resistance. So I'm going to move on here and show you the weekly chart on Microsoft. And you can see here a similar pattern on Microsoft as we saw on the S&P 500. You can see that during the bear market of 2022, the 200 MA on the weekly chart, and again, each candle here is 1 week. So this line, this yellow line, is the average price of the last 200 weeks on the Microsoft chart, okay? But look at how this yellow line, the 200, was the exact support line for the 2022 bear market. Very, very impressive, okay? And you can also see here that the 50 MA acted as resistance, right? So this was resistance here. The 50 MA was resistance. The 200 MA was support. So when you start to put this together with trend lines, right? So we can put trend lines in here, and you put moving averages together, and then you look at Fibonacci levels, you can start to see how all of this comes together like an answer to a puzzle. So it really is pretty amazing. So we're going to move on here to NVIDIA. This is the weekly chart on NVIDIA, and you can see the price action. Again, this yellow line is the 200 moving average on the weekly chart. And so every time that it hits the yellow line, or the 200, it bounces. Bounce here, bounce here. This is a kiss. Bounce here, right? Look at the 50 MA here. There was a 50 MA right here where it bounced also, and then also right here. It hit this level and moved higher. The price then came down, hit the 50, moved back up, broke through the 50, and look at the price and look at where it went. It pierced the 200, but then came back up and regained support on the 200. It also hit the 50 here as resistance. So you can kind of see all of this. And maybe I went too fast, but in general, go back and look at that chart. Put your 50 MA on your chart, the 200 MA, and you can see how this works. It's really incredible. So we're going to move on to the next chart here. And this is the weekly chart on Apple, right? So the same idea. So the weekly chart on Apple, you can see the price came right to the 200 MA and bounced. It came back down to the 200 MA and bounced. It had the 50 MA here, which was resistance, hit the 200 again, and then bounced further, okay? So really incredible. And you can see over here in 2019, the price came down, hit the 200 weekly moving average, and it moved higher. So pretty interesting. And this works really on all time frames, all right? So for example, this is the 10-minute AMD chart, and you can see a variety of things here. You can see the 50 MA coming up here, and you can see the 200 MA coming up, and there's a variety of things that are going on here. Notice that when the 50 MA and the 200 MA are together, you tend to get, and when the price goes above that, you tend to get a breakout, a very strong breakout above that level. Notice how price came right into here, chopped along the 50 MA, came back up, hit the 50 MA, and came back higher, okay? Also, look at how the 50 MA was respected there. Look at what happens when the price breaks down from the 50. Price falls precipitously, comes back up, chops along the 50, comes back down. So sometimes it works perfectly, sometimes it's a little choppy, so it just depends. Here's another point. Look at the 50 and the 200. They're crossing right here, right? This is the 50 moving average crossing down from the 200. That's called the death cross, all right? And we'll talk about that in the next couple slides. But look at how the price, and I'll just erase this, look at how the price chopped along the 200 moving average here, and as soon as the death cross occurred, the price broke down precipitously. So really interesting when you look at the charts and see how this all works. This is the 10-minute chart on American Express, okay? And we can see here how the price is kind of staying above the 200 the 200 moving average on the 10-minute chart. So what does that tell you? It tells you that that's a bullish stock. That's a bullish sign that it keeps staying above the 200, and also stays above the 50 here, right? And look at what happened when it breaks the 50 right here, price falls. So all of these things, when you put them together, it is really, really interesting. At least I find it interesting. I hope you do too. So we're going to talk about Salesforce here. And again, just going through, just showing you these examples. So again, we have the 50 moving average here. Price is kind of chopping underneath the 50 moving average. Once it breaks higher, then it gains the 200 moving average and kind of uses that as support, okay? Notice how price comes up here to the 50, stays above the 50. Look at what happens when price breaks down from the 50. You have a precipitous drop here, comes here and hits the 200 as support, can't quite get back to the 50, and then it loses the 200 right here. And look at the price fall after it loses the 200. Pretty amazing when you start to put all of this together. And again, I know it's a little tedious if you're not used to looking at charts, but and it's not going to be perfect, right? You're going to have these little pierces, but in general, it tells us the trend of the market. And you can see the death cross here. This is called the death cross, the 50 moving average crossing below the 200 moving average, telling you that the trend is down, okay? When the 50 moving average, let me just clear my screen here. When the 50 moving average crosses up above the 200, that's called the golden cross. And that's telling you that the trend is higher, okay? So really interesting to look at all of these different aspects of the moving averages. This is the daily QQQ chart or the NASDAQ chart. I wanted to point this out. Typically, you'll see in the media the death cross, the golden cross. Well, this is what this means. It's when the 50 moving average crosses above the 200 moving average, and that tells you that there is an uptrend. It tells you that the trend is starting to move higher. And look at what happened, okay? So that's a golden cross. And when the 50 MA crosses down below the 200, that's called the death cross. And sure enough, when that happened, that put us into a bear market, right? And we saw here on the Qs what moving average this hit, right? The 200 weekly moving average was somewhere right in here. And it hit that perfectly. So really amazing when you start to look at how all of this relates to price action and the trend of the stock or the trend of the stock market in general. This is Meta here. And again, here's a death cross. This is the daily chart on Meta. And right here, we had a price of about let's say $330. Death cross occurs. Price comes all the way down here to around $80. So just understanding this and selling your stock, say you bought way back here, and selling when the death cross happened, that could have saved you quite a bit. Now, this works well on longer term time frames, but if you're trading intraday, selling on a death cross isn't necessarily the time to sell, right? Or buying on a golden cross, because you're already paying up so much. So that's an important distinction to learn. These are some of the things we teach here at Verified Investing to keep people out of trouble. But again, just understand the death cross and the golden cross right here and how that affects the trend of the market. So that was the chart on Meta. I hope this makes sense to you. Go back, practice this, go through your charts. Moving averages are not perfect, but as you start to put these trend lines and moving averages and Fibonacci levels together, you can really start to see how powerful it is in the markets. So I hope you enjoyed that episode on moving averages. As you can see, it's really powerful. And put some comments in the boxes below if you have any questions or thoughts about moving averages or technical analysis or some of the videos that I've already shown here on the Market Pulse. You can catch me back here next Wednesday at 1 p.m. on the Market Pulse. Take care.